Good morning, welcome back. It is Friday morning, April 24th, and I thought today would be interesting to start out with Apple Watch coming out and fittingly the NASDAQ, specifically the Qs I'm looking at here, but you could look at the NASDAQ composite, hitting all-time highs again, or very, very close to being at all-time highs. This is really amazing. Really no other way to put it from a trading perspective. Um, if you look at the size of the move that we've had from the '09 bottom to what happened in '99 into April of 2000, it's essentially the same size move. I mean, you could clearly see it there on the chart. The only difference is the duration that it took. This time it took 6 years. The very, very interesting thing about what's going on in the market right now is we have not really seen any type of capitulatory move where you would see a very large or very quick fast move to the upside. In this case, it works the same way on the downside, but we haven't seen any kind of exhaustion where you would technically say that, all right, that's the end of the move, all the buyers are in, all the sellers are in. We are just not seeing that, which, if you don't understand what that means, that essentially means that the market is telling us it hasn't used up its steam yet, which I find absolutely fascinating. Because if you're a new trader who's been involved in the market, you're involved in a very unique time right now where the market has this bid underneath it that just refuses to go away for any significant period of time. I can tell you, it's not normal for the market to never go down for any significant length of time. It's just not a normal tape. That being said, if you're sitting back saying, "Oh my, oh gosh, this is, why did I start trading in this period of time when it's just not simple. It's just we're not getting good clean pullbacks and good moves higher and that kind of thing. Intraday is choppy and well, let me tell you something. We were saying the same thing in 2000. And then we said the same thing in 2001 when things went from fractions to decimals, and then the same thing in 2007, when the hybrid market kicked in on the New York Stock Exchange and specialist activity was reduced. Uh, there's no perfect market. You could definitely say the internet boom was interesting, but everybody talks about the upside, but nobody really talks about the $100 whipsaws intraday and that kind of thing. The point that I'm making here is that the market is always going to offer opportunity. It's just a question of how you choose to interact with that opportunity. It's exciting. It's nice news that we're up at these levels, but the fact of the matter is you need to be prepared for if and when the market finally loses this bid that's underneath it and we start to have some sort of back and forth price action, because right now it's extraordinarily easy to only be looking for spots to buy. And I'm not saying that there's anything wrong with that. That's not my point. My point is you absolutely want to be ready for if and when the market turns. You need definitive ways of identifying how you are choosing to identify an edge. How are you specifically saying, I definitely want to be long or I definitely want to be short right now? Because look, I'm going to flat out tell you, it's the bias is extraordinarily easy to tell, and clearly you can see that on the screen right now. There's never a question of whether or not you should be long right now. Most experienced traders, and I'm talking about anybody who's trading for roughly, let's call it 10 years or more, um, they're a little confused, for lack of a better way of putting it, um, and with good reason. It's just not normal for the market to continue to just go up every single day. So essentially, what I'm trying to get across to you is don't get blindsided by the belief that the market just always goes up. Because as soon as you start to believe that, you are going to get slapped silly. And what happened in 2007, and we could probably see it a little more clear in the Dow, because the Dow was actually at new highs at that point. Um, if you're not prepared with a definitive way of measuring long or short, or in my terminology, how to recognize institutional order flow, you are going to get hurt. I know, and this is probably a little bit more for swing traders than day traders, because day traders can always adjust time frames a little bit. You could drop down, you could either scalp or trade momentum if the longer term bias becomes a little choppy. But swing traders need to be prepared for if and when the market finally has a little bit of back and forth price action, because right now I know a lot of people, and I see it in the emails, I see it in comments, that are essentially of the belief right now that the market always corrects mistakes, and I'm telling you right now that's not the case. So what we really need to do is we really need to start to have some serious discussions about how to identify change of trend, how to identify when to scale back your size, how to identify when you should not be building or adding positions. There's plenty of opportunity. I'm not saying there's not opportunity. I'm not saying not to continue to look for longs because it's the better side of the trade. What I am telling you is if you want to succeed as a trader in the long term, you absolutely need to get really definitive in your trading plan to determine how to recognize what your edge is, because this is going to turn eventually. Anybody could look at me right now and say, yeah, but we've been saying that for 4 years. We are way overdone. Again, I'll go back to that chart of the Qs. That's not normal. Okay, this is not normal. Where we have like a month or two where we pull back. If you're following the videos at all, I'm really big into old school trend lines. I just feel that it's better to be involved in the action by drawing the trend lines. It really gets you into paying attention to the real price action and whatnot. So that's my little educational rant for today. If you're not 100% sure, definitely be involved, whether it's our community or somebody else's community where you could bounce ideas. I had a few people recently tell me a little detail about how they actually do their game planning, what's in their trading plan. Quite honestly, it was scary. It was scary how little work they did. So let's hope that you can learn from my experience. That I'm telling you, be prepared for back and forth action, because the market we're experiencing right now is not the new normal. Everybody will, oh, that's the new normal. No, it's not the new normal. It's just the way things are right now, and eventually there's going to be a different price action. And I'd really like to see, especially swing traders, prepared, because you don't want to be holding a position against you that you believe the market's going to pull back, because one day it's not going to pull back. It's not going to retrace after it pulls back to make new highs like magic, because that's what's going on right now. And if you're under the impression that this is just the way it's going to be, it's not. I am telling you, it's not. And the interesting thing is, more traders who are well funded are actually in a scarier position, because if you have trading as a side gig, in other words, you're a doctor or a lawyer or somebody, an entrepreneur, or just anybody in general who has a decent amount of money in the market, you're actually at risk more if you're not prepared. Very, very simply because you have this impression right now that if you're making money, it's because of your brilliant prognostication. I have a friend of mine right now who is an eye doctor, and he had a 40% drawdown in a stock recently. Sometime in the last, I don't want to say exactly when, but let's just call it the last couple of months. And he kept averaging into a bad position, and it had the potential to wipe his account out if the stock didn't come back in. Fortunately for him, it did. But I'm telling you, it's not normal. So you need to really, if you want to be consistent, and I'm talking about through different market conditions, you need to really start to dig in right now before you need it. That's what good planning is. You really need to start to create a trading plan. If you don't have a trading plan, we have a free trading plan template on the website. You can download it. It's 27 pages of really solid questions you need to ask yourself. But I'm telling you, I am imploring you, you absolutely need to be prepared.